Good morning, traders, and this is your Dow Jones Wall Street City technical analysis for today's trades. So yesterday we were pretty much top of, not sort of, let's call it a range for now. So we are technically in a range. Just want to zoom out a bit here so you can see a bit more structure. So we had the hard rally down into this area of total confusion, and you can see the oscillators agreeing that we are confused. Whenever you see the stochastic bouncing around like this, it's normally an indication you don't want to take a trade. You either want to see them pointing straight down or straight up, or tightly grouped up or down, which is indicating an area where you want to be trading. So a little bit more structure on the S&P, but the Dow is a little bit all over the place. So we have created a higher high though. So there are that's a little clue there that we've created a higher high. And on the lower time frames, the trend is sort of uppish. Okay, you can see we dipped below the 150 here, and it was looking like we're going to reverse the trend, and that changed, and we're back up again, back above the 150. So, shall we call it a slightly uppish trend going nowhere? Okay, so I've got a cup of coffee with me as well, so it's going to take a couple of sips every now and then. So what I'm looking for at the moment is, this is top of range. We're going to have to see a break above this range, a convincing break above it, not a rejection bar like this off a level. I'm going to need to see a pretty strong break above it and a pullback before I start looking long at this level. Okay. In other words, where am I looking for longs? Further down. I'm quite happy to be looking for longs down here by the gap close, or even off the bottom here. And I'm also happy to go long here with a smaller position size with my stop here, so that my risk to reward is pretty much can turn out as a 1-to-1, but never risking more than 2% of my capital. Okay, so what we need to do here is just have a look. Where is the next strong area of support? And I am going to say we are pretty much somewhere in this zone. You can see we've got a lot of tails into this area here, another rejection there, an attempt here, over, out, back, support, looked for support there, then it was resistance, support through it, back underneath it, support, then resistance, here total confusion, here support. Okay, so I'm going to assume that that's the level that we need to be looking at. The next thing that I want to do is I just want to understand exactly where the 61.8 Fibonacci retracement is and have a look at that. That brings us all the way back down to close the gap. Okay, and again, look to the left and you'll see there is a lot of interaction at this Fibonacci level. Right, and what does that mean to me? That means to me that I am looking for an opportunity long off one of these two levels. Okay, but doesn't mean I can't be short until then as well. Okay, so let's leave those levels yellow. I just want to get another level here. I'm just going to make this one a different color. You can see what I'm talking about. Let's make it blue. No, that's probably not going to help you. I suppose red would be a better idea. Okay, so you can see here we have a double touch at this level. Okay, and let's just start reading through the levels now. So it's 24,386. We have broken through it and we're pretty much hovering on it at the moment. Okay, we can argue that this is a head and shoulders at the moment. So here's your shoulder, there's your head, and there's your shoulder. We've broken below the neckline. We've come back to retest. So what does that mean? That pretty much means we're looking for a measured move down to there. And have a look where that measured move takes us. Straight into this area of potential support. Okay, so that's my first short trade. Second short trade would be a bounce off here find some structure, and then another move down to close the gap and hit the 61.8. At that point, I'd be looking at a long. Okay, the only other place I'm looking at a long is going to be a break above the top of the range and a retest. That strategy, you could probably do it on the 15 minutes. Okay, and I just want to highlight something as well while we're on this. Whenever we sort of have a strong move like this, and a lot of rookie traders would see the strong move here and assume that this is going to turn into a range and a breakout. Yes, sometimes that does happen, but the norm, when you are ranging more than 20 bars on whatever time frame you're looking at, the probability of it breaking up drops down to 50%. Probability of breaking down is 50%. That becomes a 50-50 game. If you're sideways for less than 20 bars, and then you start making a move towards the upside, the probability is higher that you're going to have a break to the upside. Just remember that. Okay, so if you break out of a range, and I suppose this was a fake out, so it probably would have trapped a few people. But this little squirt here was definitely a fake out above the level, but it was onto a higher level. Okay, have a look at the oscillators. Oscillators are agreeing with the setup that we're looking for. And the last thing I want to point out here is we do have a channel forming. Okay, so we do have a channel forming. We are above the 150. This is on the 30-minute at the moment. We're also on the hour. So we could just get a move, another push down, get the head and shoulders target here, and a buyer step in. Okay, oscillator on the hour is also starting to agree with that kind of scenario as well. We'll have to wait and see what the European Open says. At this stage, I think the most likely trade right now is another push down. So we've had strong move up. Now it's one push down, one correction up, a second move down into this area. Then I want to find structure here. If that fails, I'll look lower down, and then it's long again, and pretty much for top of range. Now, last thing I want to highlight here, and I need to come to a much higher time frame and clear out all the noise for us. So you can see firstly on the 8-hour time frame that the 150 EMA is right here in this area. Look at my oscillators, not looking very pretty. Okay, although we have had a moving average crossover, so we've had a 20 moving average crossover on the 150. So 20 EMA crossing over the 150 EMA. I'm not going to read much into it because we've done that twice in the past already. This is the third time. So what I wanted to highlight here, it is either third time lucky or third time unlucky, which is brewing in my books anyway. So what I'm doing is patiently waiting. Bias is a little bit to the upside at the moment, especially with this higher high that's formed. I'd like to see a lower, sort of a higher low form, and preferably off support, alternatively off a Fibonacci level. Okay, I reckon we're probably just going to go sideways. There's a lot of noise again in the market this morning, so it's going to take a big catalyst for us to break through this level. I think this is kind of the norm for the next, well, for the short term at least, possibly even a bit of a longer term. So that's kind of my view at the moment, and for as long as we're in this range, okay, I'm not looking to be long in this area here. I would want to see a breakthrough and a retest of that before I'm long in this area. I'm looking for longs lower down. So either at a decent level or a Fibonacci level, and I'm quite comfortable taking a much smaller position that my stock can be below the bottom of the range, ensuring that I never risk more than 2% of capital. Okay, anyway, that's my setup for the Dow at the moment, and probably going to be trading the S&P rather than the Dow. I think there's a little bit more structure there at the moment than there is here, but we will be keeping an eye on this. There could potentially be a fairly decent setup brewing at the moment. Okay, hope it helps, and we'll catch you later. Cheers for now.